The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Thank you for being with me this evening. And I can see everyone's coming in a little bit late this morning. I've had some changes to the settings of this program, so I'd be grateful if one of you would type in the question box how the volume is. Can you hear me okay? I know the Gregs are here. Yes. Oh, it works. Wonderful. Yawn. Thank you. Mark, of course, Mark L. Well, that's amazing. Technology constantly baffles me. Okay, well, great to have you with us, and Melissa as well. How lovely to have you with us, Melissa. Wonderful. And Vicky's with us. As I say, we don't have many ladies attend, which is a shame. We'd like to have a lot more, but we've got Vicky and Melissa here today, which is great. We've got all our usual old friends, including Rob H. over in Auckland. Hope it's nice over there for you, mate. Justin down from the Hunter Valley, our guy who does all the amazing research for us. Yawn, who we're going to be talking about. I'm going to give you a call. We have a meeting, Yawn, probably Monday. I'll confirm that to you, see if that suits you. Greg Palladini and the other Greg, they're both master traders. They're both wealth fund managers and long-time Danielcode supporters, for which I am grateful. Gabe is with us over in California. Andrew, of course. Chase, good to have you with us, Chase. And there's a few here that we haven't seen for a while. It's good to have you. Steve's one of them. Good to have you with us, and all the others, of course, Mark L. And our friends. So, what an exciting time to be a trader. I mean, we've had wonderful volatility in the US dollar for a while now. And what it's been doing to the Forex pairs is quite sensational. And we're going to talk about that today and many other things as well. Greg Palladini, always learning something on these webinars, including the word spruikers. Spruiker is a promoter, a person who's, you'll often see him at the racetrack. Oh, this is a good thing, you know, you should have $5 on this for me, and it's going to be a good tip. That's what spruikers are, people who are promoting a particular point of view. Gold is famous for its spruikers. We call them gold bugs. They are deeply embedded and invested in gold and all the possibilities of gold. And some of our members here, we have a large number of gold bugs. Rob's over in Redding, California. He's usually with us. George has just arrived, says he. Gold bugs are deep, they're spruikers. The ones I'm talking about, of course, are the guys who are actually selling bullion, I should say, and their mantra is, you don't want to have anything to do with paper gold, don't trade futures, don't trade COMEX, just deal with us, we'll sell you real gold at an inflated price. They are spruikers. You'll know all about them. Okay, so we have a huge program today. So much to talk about. A whole lot is depending on what the S&P does tonight. And we're going to talk to that at a little bit of length towards the end of this meeting today. So let's get the show on the road and see what we've got. First of all, what we've got is Stop the Noise is what I've named this session today. And I'm always amused because I used to be a victim of this myself. It's not. This is not a holier than thou attitude, I can assure you. And that is the noise that is generated around trading, and it's people who are commentators. They're people who write about markets and trading. There's radio, there's television, there's squawk boxes. And the inevitable spruikers, urgers, and other unsavory characters. And none of this is virtuous, and none of that noise is going to help you make one single dollar. And what I'm constantly struck by is the effect that all this background noise has on people. People will say, oh, I'm very bullish. I read this in the Wall Street Journal. Well, there you are. There's the Wall Street Journal. Financial Review's another one. Barron's another one. There are enormous numbers of newspapers. Bloomberg's another one. And all they're doing is they're telling you history. They're journalists, almost exclusively, are employed to try and convert what the market did today into news that you can read about and understand tomorrow. And it's simplified, of course, to the level of absolute stupidity. But that's what it is. So switch off the noise and let's just focus on trading. And we've got a couple of new members with us. John's one of them. Tell you how simple the Danielcode is, and most importantly, how massively profitable it is. And remember, all markets trade exactly the same. Stocks, futures, Forex, crypto, all are bound by a single rule. And I'm going to show you all of it. So there are a few matters that you need to be aware of. This won't affect your trading, I can assure you, but there are a few major matters that you need to be aware of. The first is the US budget deficit, and this is a little extract of this article that you're reading now from Zero Hedge, who always have a rational view of what's happening. And this is the expenditure that's been going on under the Biden administration, and it's mind-boggling. It's just truly mind-boggling. So, and as he says, they may, Elon might be able to shave off some millions and billions, but he's not going to fix what this problem is. $840 billion was the budget deficit in the first 4 months of 2025. And of course, interest on now actually matters. It didn't matter so much when the interest rates were at zero bond, but they're still very light, but they're also very real. And debt on the record US debt is the debt is 1.2 trillion. That's being monetized by the Treasury and the Fed. So what's going to happen with all this? Well, it's going to be inflated away. Is this going to affect your trading? No. Is the US going to go broke? No, it's impossible. US is a sovereign nation. It has its own currency, and it has the world's reserve currency, the biggest in the world. And we've had these issues before, endlessly. You're going to hear a whole lot about this between now and the 14th of March. Thank you, Slarwick, for that date, giving me that date, which is when the so-called special measures being adopted by the US Treasury are going to expire. In other words, that's when this issue of the US debt is going to become a serious issue, and it's a political issue. And the Democrats, who've absolutely slathered the spending in a most unconscionable way, really, it's been just so extreme, it's off the charts. They just suspended the debt level because a U.S. debt is mandated by Congress. It's an act of the Congress what that debt can be, and it's a little bit misleading because this issue of the debt level or the limit on the debt. What the Democrats did during Biden's term is they simply suspended the debt limit for 2 years and went ahead merrily spending as much money as they could, and often in not a very wise way. So that has to be dealt with. And the strange thing about it is that it's always dealt with in retrospect. In other words, the debt's been incurred internationally, and now it's a question of the Congress giving the authorization, but the money's been spent already. And we've seen fights about this years and years. It always happens. You can go and read a whole lot about this between now and the 14th of March, which is the date on which it all becomes very real. And as usual, Congress will find a way to slide it along for a bit. And of course, Mr. Trump's first requirement, his first request of his Congress was get rid of the debt limit. I can't do a deal without the debt limit. So you can gather he's planning on spending a whole lot of money to achieve his objectives, some of which are pretty sensible, aren't they? They're not quite as hysterical as the market makes out to be. So this is another issue you have to be aware of, and that's inflation. And inflation in a simple non-economic sense is simply too much money chasing limited goods or services. And it is an iniquitous beast. Once it gets hold, it's very, very hard to get rid of it, and it's nasty. It's a silent tax on consumers. And the whole system is rigged against disclosing the truth about inflation. Those of you who are with me all the time on these webinars, and I know many of you are, for which I'm most grateful, will remember a couple of years ago I had a big discussion about inflation in one of these webinars, and said that domestic inflation, as far as I could measure it, which was pretty accurately, was 14%. Up to that stage, you hadn't heard the word inflation spoken about or written in print for a number of years. The very next day, there were 7 articles in the major financial journals, papers, etc., about inflation. And government goes to extreme lengths to conceal the real rate of inflation from the public, because the official measure of inflation, it literally deletes the products where inflation is most felt. In our hip pockets, gasoline, food, rent, clothes, everyone buys these articles. And most of them are specifically excluded from the CPI calculations. CPI is a cost price index. It's not exactly what the Fed uses to measure it, but it's not a bad approximate. But it's all the hot ticket items, the ones that are really burning a hole through your pocket, they're excluded. Well, why is that? Well, they say it gives a much fairer reading, which of course is absolute rubbish. It doesn't do anything of the sort. Gasoline in my part of the world is so expensive you have a heart attack if you're an American and knew what the price of gasoline in Australia is. And it's something that almost all of us have to buy. There are a few now that don't. They're on electric cars, but they're very much a minority. And these items are excluded. That's how the government can even dream of saying, oh, you know, inflation's around 3%. Inflation's still sitting well above 12% real inflation. And you know it because you live with it. Your wife or yourself, whoever does the shopping, and I have to go and do the shopping occasionally. I don't do any domestic issues at all. I'm very lucky like that, but I have some cats. We have 2 children, 2 dogs, both rescue dogs, and 2 cats, which are rescue cats. And we've always had cats, and after our last few, the last little one left us a couple of years ago, I said no more, no more cats. It's just too heartbreaking. But anyway, believe it or not, my son turned up with a big carry-all. Oh, he said, look, I've got a surprise for you. And I looked into this. You could just see into the little panel that was open. And I could see these 2 golden eyes looking back at me. I said, oh, how amazing. Very beautiful. And I looked a bit further, and all of a sudden I could see 4 of these little golden eyes. And I thought, you know, my eyes have been going downhill for a long time. You'll reach an age, all of you, where everything seems to go downhill. But it was like, God, that's me. I've really got to get a new set of glasses. I'm now seeing double. Well, I wasn't seeing double. There were, in fact, 2 cats. They're a brother and sister. They're both jet black. Got the biggest furry tails, the longest furry tails you've ever seen in your life. And they were a bonded pair, someone told him. So if he wanted one, he had to take 2. Well, that was fine. except he's not here very often. In fact, he's been away this year, the large majority of the year, I would say. And what happens then? Well, Dad gets to look after the cats. Mrs. Needham looks after the dogs and us, and I look after the cats. So periodically I have to go to the supermarket and see the prices that people are paying, and it's a shock. And it is a shock. And if inflation is so timid now that we can be reducing official interest rates, why hasn't that changed in the supermarket? Are prices coming down? Is there any sense of deflation? No. The Fed hates deflation. The only way banks will survive is through inflating away the debt. So that's an issue. Tariffs are going to be an issue, and many years ago, I was the executive chairman of a substantial publicly listed company, and we were big importers of footwear. And that was it was an industrial rubber company, but one of its divisions was footwear. And the Australian footwear industry was being absolutely decimated by cheap imports. Australia was and still is very much a high-cost basis. Trade unions, whilst they're losing members all the time, they're still an enormous power, and they control one of the major political parties. And periodically, they get into power, as they are now. It's called the Labor Party, Australian Labor Party, and they pull a Biden and see how much money they can waste. And one of the ways they waste it is giving ridiculous wage rises, which the rest of us have to live with. But we had a lot to do with tariffs, so I'm very familiar with them because they're sometimes used to protect industries that are socially important, big employers of labour, but can't compete with international levels where they have much freer markets and lesser cost of labour. So, but tariffs are a charge levied by the state at the geographic point of entry. So Trump's announcing all these tariffs all over the world, and they're literally a tax on consumers, and the importer of the goods subject to the tariff pays the tariff. In other words, if I want to import steel into the US right now, Trump's already announced there's a 20% tariff on it. So whatever's been the cost of those goods, and often enough the transport to get them to the point of taxation, I've got to pay 20% of that. And who am I paying it to? The government. So the effect of tariffs is they limit competition and they protect inefficient industries, basically. The other thing they do is they raise massive amounts of money. Think of 20% on all the steel and aluminium that's imported into the United States. It's a lot of money, and there's a lot more to come. And Trump's tariff announcement today has truly global implications. And there are some domestic taxes like VAT, value-added tax, very much a child of the European Union, that are themselves a form of tariff. And Trump's wide awake to that. And we're going to have to deal with that, as the two branches. One increases prices to consumers, and two, that money goes straight to the government. And that's a big theme of what Trump's doing at the moment, getting rid of regulation, making trading opportunities freer, less regulated is a big issue, getting rid of a lot of the nitpicking that's been set up under the Democrats, who have been greatly concerned with social issues that really should have nothing to do with business, but they are. Now, remember the other important thing, liquidity. That's the thing that really matters. The lifeblood of markets is liquidity, and that's largely controlled by the respective central banks. The U.S. central bank is called the U.S. Federal Reserve. and it's quite literally owned and controlled by the major US banks. And with the COVID pandemic, central banks got spooked. This is not having a go at the US. They're quite virtuous compared to some of the other countries. But all central banks got spooked and flooded markets with liquidity. And that actually set the fuse for inflation, because the money supply, not in the pure economic sense, but in the everymanic sense, how much of this money is available, the answer was lots. At times it was unlimited. And that was the fuse for inflation to raise its ugly head. And the Reserve Bank, the US Reserve, like all Western banks, it's struggling to put the genie back in the bottle. And inflation is sticky. I've lived a long time. I've lived through some damning periods of inflation. It's sticky. It's very, very hard to get rid of. Some of you will remember Volcker back in 2000. He was the governor of the Fed, Paul Volcker. And he raised the interest rates to 8, 10, 9, 11%. Didn't make any difference. All of a sudden, he raised it 20% overnight. And there were still a few diehards who kept saying, well, we can live with that. So he raised it to 22% a week later just to give them the message. And that killed inflation. But that's what it took to knock inflation out of the banking system back in 2000. Is it very different now? Can we get rid of inflation with the banks running 4% type interest levels? Well, they haven't done it so far. But anyway, you don't have to worry about any of that, because if you learn to trade the Danielcode time signals, that will make you an elite trader. You can make as much money as you want, as often as you want, like every day, which is wonderful. Okay, so this should be your trading mantra. Danielcode's created by historic time cycles. They're based on our natural laws. And these time cycles can be converted to price cycles, and all markets are controlled by these Danielcode cycles. So take a look at the chart archives, and I don't think many of you have, on the Danielcode website, and you'll see every member's chart that I have created since our website went public in late 2007, and there are almost 50,000 charts in this archive, all of which have been created by me manually. And are they time consuming? You bet. That's just a huge, huge part of the work for the week. But what you'll be looking for is you'll be hard pressed to find a market that has ever turned anywhere except at its Danielcode target. And those are price targets which are created by converting Danielcode time targets. So in effect, time and price become the same thing on different axes. And that's because the way they're created. We start with our Danielcode discovery, and we get some price ratios. We are then able to convert those price ratios into time targets. And that's what you're seeing on these members' charts. And it's extraordinary. But the time cycles are even more extraordinary. And what you're looking at now is TTT. This is you teach yourself to trade. This is our newer teaching system of trading market. It's a all video system. You get the videos at your home or your place of work, wherever you like, and you just teach yourself to trade at your own time. Have a look at this. This is the euro US dollar pair. And what I've done is I've just put a 29-day cycle along the bottom. This is the DCA up and DCA down. These are Danielcode time cycles, and they're quite extraordinary. If you look at this chart, which is 3 years and 7 months, that's about as much data I could fit on a page that you could see it. And the first thing you'll notice is every significant high and every significant low has come at one of these expiring Danielcode time cycles, without exception. Now, why am I using a 29-day cycle? Quite simply, that's the first number you discover when you are creating Danielcode from its historical source. 29.6 days is Danielcode time. You don't have to worry about the 0.6 because, excuse me, almost 1/3 of the daily bars are not even on these charts because of weekends and federal government holidays. And that's 29.7% of the bars in a full year. So pretty close to 30%, not far away from a year, is it? From a third of the year. It's a huge number. And they're not even on this chart. But you can see every significant high and every significant low, without exception, has come at one of these Danielcode time cycles. We're not saying these are the only turns. We're talking particularly about a particular time cycle. There are other points where it's hit and given smaller level terms, but I wanted you to get an understanding of the impact of this stuff. It is amazing. It is not self-fulfilling. It is self-creating. Once we set the time cycle on and it finds the right place to start, it creates these levels itself. DCA up and DCA down. Here's the next one. This is the same thing on gold. And this is also a 2-year and 7-month period from July 2020 to May 2022. Have a look. It's exactly the same thing. This is a futures contract in a market that is notorious for being affected by external factors like commentary, like the Fed Reserve, everything else. And same thing. Every significant high and every significant low comes at a Danielcode time cycle expiry. And the expiry is when either of these tools, DCA up or DCA down, gets to 100%. That's the expiry. And you can see it's absolutely amazing, quite extraordinary. It doesn't miss one of them. Here is British pound. This is a cable called cable, British pound to US dollar Forex pair. And this is from May 2023 to date, to give you a more up-to-date picture. Exactly the same. Every significant turn has come at the expiration of a Danielcode time cycle. Not arguable, really, when you see it like that, is it? So, all of this stuff leads us into our teaching of trading and our newest teaching, the TTT, or Teach Yourself to Trade method of video trading, that you get your videos, learn from at your own pace in your own house, whatever you like. One of the questions that comes from this general concept of trading is, how good is your trading? Very well-known guys. Frecht is probably the best known of it. No doubt, I know for a fact he was an absolute gun trader as a younger man. What he teaches, Elliott Wave, to my mind, is the most confusing hodgepodge of ideas you've ever seen. But it's also the most popular globally. Ridiculous, isn't it? So the question is always been based for everyone except me on how good is my trading. Here, let me show you how brilliant I've been. I can teach you to do this. Well, the reality is most of them can't teach. Or else there's one who's a great friend of mine that I sincerely believe he knows a whole lot about markets, but he doesn't teach it. And I've been to a few of his tutorials or seminars, as he calls them. He doesn't teach it. I do believe he knows, but he doesn't teach it. He trades himself, of course. But the question shouldn't be how good is my trading. The question is, how much can I teach you? How can you learn? In other words, the question is not how good is my trading, or how good is the trading of all of these guys. And there's a whole lot of them out there teaching in one form or another, lots of noise. And I've been to most of them. You think of their name, I can tell you I've been there. And while I know they were great traders, nothing gave me the results I was looking for. That is a consistent and sharply rising equity curve. And that's why the search for Danielcode was born. And it took many years, 7 years at least, and considerable funding, let me tell you. But now you can be the beneficiary. So I'm now going to show you briefly what new members are saying. Read this stuff, digest it, email me to book your ultimate step in learning when you've had a chance. This is an email from Frank, a different Frank, and you can read it for yourself. He says, I never would have thought that I would ever find so much unbelievable information and history. And during traveling, I was able to listen and read many hours of someone or other, and somehow, Chuck, yeah. Okay, so no soft benefits, but deep and structural analysis. I'm having short nights for this. Cannot wait to see more about it. The Danielcode really changed my life. It is life-changing even without the trading. You heard this before? Mark L. Happy to say, Danielcode changed my life. You've seen that many times. And this is Jorn, who's with us today. And Jorn will be having another follow-up discussion with me on GoTo. He's doing the done and perfecting, should I say, his TTT trading course. And I found that for some of them, for some people, it's really helpful to have a talk to me about how you've adopted that, any questions you may have. And for Jorn, we're going to have a meeting next week. We've had one already. He sent me a list of questions. We're going to deal with all of those next week. So this is what he wrote to me, saying he'd finished up trading natural gas 2016 paper trading. That's a piece of market chart that we ask everyone who does a tutorial to paper trade, because it tells me exactly where they are in their level of excellence. And the level of excellence, of course, comes from Mark L., who's with us today. But have a look at this. Here's a guy who just got the TTT course. That's all. And here he is, 817% on margin, or 747% on margin. Either way you look at these figures, they are staggering, mind-boggling. Never before has it ever been, and even now, it's not believed that this is possible. You talk to any trader apart from Danielcode, they'll say, you can't do it, never heard of it. Well, a whole lot of our guys have done it. And this is Jorn still. He said, your trading system is an absolute beast, and yet so simple that anyone can do it with the right amount of practice. He says, I'm still wrapping my head around how all of this can even be remotely close to real. And that's giving him more headaches than the learning. So this is why the TTT system is so brilliant. We put it out there with great hopes, because it was my aim to create a much cheaper version, the full Danielcode Masterclass and Beyond Masterclass tutorials. They're still available. They're one-on-one with me. They take quite a lot of time, and they are expensive, and too expensive for most people. So I wanted to create a product that was about half the price of the traditional teaching that I do, and that we did that through this Teach Yourself to Trade video trading course. And I'm thrilled when these guys come to me and say, I've done this and here's my results. Wow, that's fantastic. That's brilliant, because it's showing that the whole Teach Yourself to Trade program that I've developed is working. Guys can learn this straight away. They can go with their 5, 6, 7, 800% on paper trading. We've got Mike K over there. Here's Jorn's just posted me live. DC is really life-changing in multiple aspects. So much discoveries. Let me see what we've got here. Yeah, here he is. So much discoveries left untouched, and that's true. And you're going to learn a bit more of that today, incidentally, Jorn. But I'm most grateful to have these support from my students who are just absolutely in love with Danielcode. Okay, let's move on and see what he did next. Well, what he did next is he wanted to find a market that was very small, very cheap to trade, because he's got some ideas about his percentage that he's been risking on his stocks trading. And he found MCG. This is the micro contract in gold. And it's really interesting because he did exactly the same thing. Have a look at the win rate, 4 lines down, 44%. I say that our win rate over a period of time is 52 to about 62%. This particular run of this particular market had a win rate of 44%. Now have a look down the bottom. The profit on margin was 643%. And one of the amazing things about Danielcode is that the average win is twice or more the average loss. For this particular market, the biggest win, the average win, is $516. The average loss is $168. So this is about 250%. The average win is about 250% of the average loss. And that's what makes the money. It's not the win percent. This, as you can see, has got a pretty ordinary win percent by our standard at 44%, but he's made 643% on margin. Amazing. And a really good example of what I tell you. So the next level, guys, for those of you who already done masterclass, which is the Danielcode tutorial, either personally one-on-one with me or level 3 of the TTT, Teach Yourself to Trade program. The next thing after that is what I call Beyond Masterclass. And this is not a trading system. The Danielcode time trading program is the trading system. What this does is it's an adjunct to your trading. It tells you a couple of things. It tells you can see I put these little pinky looking triangles all over this chart. And where you haven't got these pinky looking triangles, you've got some blue elliptical measures. And they're areas where you had no level 2 momentum bars. And hold for the punchline about knowing this. Being aware of these momentum moves, and there's a finite set of rules, and there's a new special tool to calculate these momentum bars. Where you've got a momentum bar happening, and typically they occur 2 to 4 days from the swing high or swing low. In other words, they come in pretty fast. They tell you you'll be in the trade, of course. If you're trading Danielcode, you'll already be in the trade, but now it's saying to you, this is a trade where it was worthwhile on the percentages to relax your stop and let this thing have room to move. The other hand is when you don't have momentum moves, it's not wise because you're going to get stopped out, and this is where all the damage gets done. And if you can avoid, remember, we're looking at extraordinary markets, extraordinary volatility, and we have had it now for a couple of years, a year and a half at least, super volatility. You're not going to get these moves all of your trading career. But when you don't get momentum bars, guess what you got? Bad news, and I'm going to show it to you. Here's gold. Same thing. Lovely momentum bars highlighted in pink. Look at the areas where there's no momentum bars. 1, 2, 3, 4 of them. They're not big, but boy, they're destructive. They can do some damage to you. Don't worry about that. Here's the NASDAQ. And even though it's had marvelous momentum bars, it's had periods where there were no momentum bars. And the chart still looks dramatic. From this high in January, it looks like a really big move. It looks like that should be great trading, but it's not. And it's not because directionally it's changing too often. Let's have a look at another one. This is soybeans. And you can see a couple of areas here down about where that rollover was in early November. Then the same in early December. And again, in February, where you've had no momentum bars. What have you got? Trouble's what you've got. And I'll show you exactly as we get there. This is Forex. This is the Aussie US dollar pair. have a look right at the beginning and the end of this chart. You can see there's like, I don't know how many sideways bars there are, an awful lot of them at the beginning, and the last 1, 2, 3, 4, 5, 6 or 7 of them right now. No momentum bars. What do you get? I'm going to show you. This is the Kiwi, New Zealand US dollar. Same thing. Right there at the beginning, you can see that. Looks like a decent up move. It's got no momentum bars in it, so you're just going to get chewed up. Later on, you can see along here at end of December, early January, no momentum bars. From this, those of you who come often and regularly to our webinars have heard me introduce you to Needham's rule on squares, and that's what this is. So you will see that where these are the same charts, and where they have the elliptical blue circles, they're not circles, they're ellipses, aren't they? Look what else you've got. Look at the red boxes there. They're the squares that I talk about that the market provides. And in those squares, you don't do very well trading because you've got no consistent directional bias. You've got strong up moves, equally strong down moves. Wherever you see a square, if you can avoid that, let me move to the next one, you will improve your trading, your profit and loss so much. Here's gold. Have a look now where we've got the red squares. 1, 2, 3, 4 parts of them. There's not a lot of them, is it? This market, as I say, has been so volatile, so fantastic to trade. Be aware this volatility is not going to last forever. And you'll see in another chart or two that there are large parts when you have no momentum bars. And when you have no momentum bars, the very best thing you can do is get flat and get out. This is the Canadian dollar Swiss franc pair of the chief. Have a look at it. No momentum bars, no momentum bars, no momentum bars. If you are trading through those periods, it looks good, but you'll be losing money. And if you can identify these areas that are going to be subjects of the red square, as you can now see, if you can identify those periods and either be using a much tighter stop or quite simply stand aside until you see a momentum bar. Okay? Huge difference to your trading. And you can teach yourself to trade with our new video series. On the front page of our website, www.thedanielcode.com, you'll see these 4 videos. The first one's by a gentleman called Mark L., who's with us today. Very stalwart supporter of ours, never misses a tutorial or any other way to support us. Wonderful man. The video number 2 was done by Amy, who lives in Boulder, Colorado. Video number 3 and number 4 are both done by Justin, who's with us today. He's a young gentleman from the beautiful Hunter Valley down in New South Wales. And you can see what he's written. Seeing is believing 500% in 10 months. Seems impossible, but we did it. He then went on in video 4 and he researched every market he could think of, Forex, futures, in commodities, currencies, everything. I never had a losing year. And of course, Mark L. right at the top in video number 1, he says, I've said it before and I'll say it again. John Needham has changed my life. For his paper trading of natural gas 2016, he returned over 1,000% on margin net. So test yourself against that. Test yourself against that. Okay? Right, so in this TTT video series, there are at the moment 4, and I tell you what they all are here. I have now dictated Beyond Masterclass for the TTT video series. It'll be posted by Terry probably before the, or maybe say by the beginning of next week, and you'll be able to learn how to avoid the pitfalls of the no momentum bars. and that's what we've been talking about. That's been hugely successful. The traditional masterclass tutorial one-on-one with me is also available. And here's some quotes that Mark L. and Greg Palladini, he's also with us today, were kind enough to let me use to tell you that this is something that has had huge benefit to them and changed their lives, and you should do it. For our Teach Yourself to Trade, if you buy the whole TTT course, if you want, I'm happy to give you a 90-minute teaching session one-on-one with me. That's not part of the course. In fact, originally I said if you want that, you have to pay for it. Well, what I found is that by simply having a 1 or 1.5 hour conversation with you when you've done your TTT course, it just ties up all the loose ends. It just ties up any slight lack of understanding that you have. It makes you a much, much better trader. So that's available free of charge at the moment, and will be for a little while at least. And if you would like to take that course, email me, janeneedham@thedanielcode.com, and secure your spot. Same applies for the normal one-on-one training with me. So we believe that this historic bull market ends in 2025. We're talking about equities, the S&P in particular. And if you go to the articles tab at the website, you'll see Frank's latest article, When the Music Stops. And he wrote that in January. It's very well worth reading. This is his general summary from that article when he's talking about the probabilities for 2025. Now, remember, there are two words that should never ever come into your vocabulary as a trainer or an analyst. One of those words is always, and the other word is never. What we are actually working on is probabilities. Some of these probabilities can become very high indeed. In fact, we're going to be talking about a 92, 94% probability shortly. But this is the layout for 2025. There are 3 topping cycles that are likely to be very important. One of them is with us right now, and we'll have to be dealing with that shortly. This is Frank's current and previous postings on the 4th seal, which is our forecasting methodology in the S&P. And you can see in this week's comments, which he posted on Monday, he says it's over. We had a 59 cycle top late January. That gave us an exact swing high for SPX so far. Price action is muted. Market continually tries to make new highs, but fails to do so above the January high. Last Friday, there was another attempt on the ES 057 chart. We saw a key reversal bar down. That was rejected at the black line on the daily chart. This is a bad sign for the bulls. Well, this market, he says, now sees the black line as solid resistance and tells us it wants to go lower. Excuse me. Now, the Danielcode black line is the most amazing beast. This comes straight out of the analysis of Danielcode time signals. It's the last number in the sequence, which you learn if you've done a tutorial with me or you've done a TTT lesson 1, you'll know what I'm talking about. And the Danielcode black line is 89.2% retracement, and that comes straight out of the Danielcode time signals. But it's slightly different to the others. All the other lines in that sequence are support or resistance in a normal way at the bar high, bar low. The black line is different. It also works as support or resistance at the bar high, bar low, but it has another quality. It can stop a move at the 89% level. And you'll see time after time after time on the Danielcode members charts how markets will run up to that number and pause. They're having a think. Can I go through it or not? If you can get a daily close the other side of that black line number, the probabilities switch massively to the proposition that the old swing high will be taken out. Now, when you're looking at that just on daily charts, it doesn't always mean so much. For example, with the current S&P, we've been long for a couple of days. There's a sell signal for tomorrow that may or may not be elected. By elected, I mean your sell order getting filled. So, excuse me, but some years ago in gold, we had exactly the same thing on a 6-day chart. And I can remember saying, if you can get a daily close above that black line, probabilities are it's going to go to new all-time highs, and it did. And on the weekly chart, that was worth $28,000 per one contract. Marvelous. And you can learn how accurate these charts are. We don't spend enough time, or you don't spend enough time, looking at charts and thinking about what they're saying to you. The accuracy of these charts is phenomenal. Not only on the daily charts, but on the 6-day chart, which I do for some people as well. Incredible stuff. And you wouldn't think it possible because, as I say, we're only dealing with probabilities. And right now, with the fourth seal, S&P, which will be the fate of the rest of the equities, there are a number of probabilities. Option one is we get a top in equities very shortly, or as Frank's saying, we might already have seen it in January. Option two is we get a top now followed by another top later in the year. Option three is the market just keeps playing ahead. Option four is any variant of that you like. So, but remember, we have 3 topping cycles for the fourth seal during 2025, and you need to be paying very, very close attention to them. This is the fourth seal chart. You can see this is the this is the S&P index, not the futures, folks. This is the index, and it made its high right on a known 59 cycle. And these are Frank's comments on gold as well. I know we've got a lot of gold bugs, a lot of people who trade gold. It's a wonderful, wonderful trading market, but might be a time to just be thinking a little bit about lightening up and looking for a pullback. Now, have a look at this really carefully. This chart I did while the markets were still open. The high of this market today is 6138. That's the high. It's actually pierced the black line at 6137.25. But the way the black line works is it works not only as support and resistance at the high-low, but very strategically on the close. And the close of this is at 6135.25. 6135.25, 2 points less than that black line. But you're into a key reversal bar. You've been in a corrective ABC packet down. It really, really looks very likely that it's going to take out that black line on a closing basis. And you can see that's why the market's been so incredibly careful. It was happy to just breach the black line, but it wasn't going to close above the black line because it doesn't know yet. But it will know, and perhaps very shortly. Have a look at some other things to think about, you guys. This is, what am I doing here? Showing you this is the same. Oh, this is just, I got an update after the market had closed. I got a little bit more accurate, but I've explained that to you already. Where did that black line come from? Well, this is a chart that I created on the 5th of February, which was the last significant low. The black line comes straight off that low, and you can see it sitting there right here, 6137.25. That's been sitting there since the 5th of February. In fact, it was actually a couple of days earlier than that. So we don't make these things up. The market makes these things up. The market decides, and we do it. Now, have a look at this. This is the continuous 057 chart on the S&P. Futures, of course, run for limited periods, and then when that period's expired, they roll over to the next contract. The 057 is the continuous contract without any back adjustment. In other words, the price it gives you are real. So this is the daily chart of the 057. What you're seeing on the website, and in my charts, is the front month. This is what happens when you put all those front months together. This market closed today above the black line, which was at 612,475. Have a look at this. This is the S&P index. Look at the black line on the index, 6105.67. The market closed well above that today. The probabilities are that the high is taken out. The close above the black line tells you the probabilities have changed, and the probabilities now are that the all-time high will be taken out on the probabilities. Okay, interesting. Think about that. Let's have a look at a couple of other ones, and I'm still on the theme that there's much more in these charts than you think, and there's much more to learn. Look at the low of this oil today, and I put a comment there saying precision. The low of today's bar was 70.23. Have a look at the blue line, 70.20. 3 ticks variance. It's nothing. That's not even a piece of hair. That's how accurate this thing is. Does it do that all the time? Yes, all the time. This is copper. We've been long copper since the last low. We got short for one day on Tuesday, and then long again on Wednesday. Look at today. It's just ripped through 4 different levels of price. And where it's closed, there's 10 ticks variance on a huge momentum move. Go back 4 bars. It closed right on the 470.55. These markets do this exactly all the time. They move from one Danielcode to another. That's what they do. The red lines and the black lines are retracements of a range. The blue lines are extensions of a range. And the markets do this every day, all the time. Exactly. By exactly, I mean a few ticks. Have a look at this. This is natural gas. We've been on this for a few days, and now it had a huge run out, took out the high, got very frightened and pulled itself way back. But look where that high came in. Natural gas, the high today, as I pull this chart to a place I can see it, 3786. 3786. Look at the blue line. 3788. 2 ticks variance. And that line's been there since the low. And I mean since the February low. That's where the blue lines come from. 2 ticks variance in a huge momentum bar. It rushed up, roared through half a dozen lines, hit that stop like it was shot, turned around and pulled back in a great hurry, and left a small gap at the low. 2 ticks variance at that huge momentum high. How often does this happen? All the time. Here's your NASDAQ. Look at the NASDAQ and the black line. Now, it's been in retreat for months. Today, it went punched straight through its black line, which was only the black line for the minor swing, incidentally. The black line for the major swing, the 057 chart, is not on this chart, but it's much higher. This is the Russell. It's been pulling back for a while. Doesn't know quite what it wanted to do today, so it just turned around a bit. And here is wheat. Here's the low of wheat, an interesting market. It does this all the time. The actual low in wheat today was 571 caret 4. That little arrowhead there, science called it caret. 571 caret 4 was the low in wheat. The Danielcode red line retracement is at 571 caret 4. That is 0 variance. Nothing random in here. Any of you who still believe that markets have anything random to do with them, read some of the material on the Danielcode website. Go through some of our 100+ videos. Read through the articles. The market has been doing this precisely and this exactly forever, and hardly anyone knows about it. which is a tragedy, because it's such a wonderful, wonderful tool, wonderful opportunity. So that's pretty much me for today, folks. Very interested to see how the S&P resolves it all tonight. Tonight, your tomorrow. But if you haven't already had a free trial, please go to the Danielcode website, hit the register button, and feel free to take a free trial of everything at the Danielcode website. If you have any issues, contact Terry at support@thedanielcode.com. The computer has a memory. If you previously had a free trial, it won't want to give you another one because it's mean, but talk to Terry and he will resolve that for you straight away. Finally, here's our disclaimer, which we are asked to publish for you, and I'm very keen on telling you, please do not risk any real money trading futures or Forex markets unless you are confident that you know what you're doing. It is very easy to lose all of your money trading in derivatives if you don't know what you're doing. The good news is, once you do know what you're doing, it's equally easy to make a whole lot of money. Taking the Danielcode TTT course or the full one-on-one masterclass is the best way of ensuring that you are competent, and more than confident, you will become an elite trader. So that's me for the moment, folks. Do enjoy your weekends, and thank you for being with me today. Quite wonderful. Glad you were here, guys. And I'll look forward to talking to you at our next webinar in a fortnight. Greg Young's son knows what that means. Here's Rolf. Video 1, self-learning enrollment. Yeah, good. Wonderful stuff. Rolf, he's going to do that this weekend. Wonderfully. Wonderful. Well done, my friend. Great. Okay, folks, that's me for today. Good luck with the trading tonight. It's going to be very, very interesting. And enjoy your weekend after that. All the best for now. Bye-bye.